Ladies and gentlemen, we have extreme volatility today. And we heard from Tom Lee this morning, and I will share that clip with you here to start this video. But there's a lot of back and forth headlines coming out right now. The general consensus on Wall Street is, though, there's going to be some kind of likely delay of tariffs, but it may not involve China. That's where things are going to get interesting, and we'll discuss that throughout this video. But first, take a listen to what Tom Lee just said about this market. And I have to say, this is probably one of the most bearish clips I've ever heard from Tom Lee.
Investors, Funstrat head of research Tom Lee saying, we want to apologize as the terms of the tariff liberation day were far worse than we expected. Tom Lee is a CNBC contributor, and he joins us now. But Tom, when you try and do direction and duration in the same way, we always go, I don't know how you expect to do that. So in this point, at this time, you didn't really anticipate that formula, I think, that was going to be used to arrive at such high tariffs. Kind of maybe got blindsided by that to some extent. But with that in mind, you still think we're starting to see signs of a Trump put as of yesterday. Maybe the NASDAQ closing higher is an indication.
Yes, that's right. Markets are stretched to the downside because we lost, almost 13 percentage points in 2 trading days. As you know, it's almost like the stock market and the economy was delivered a heart attack from the terms of those tariffs. So I think that there is a bounce underway. Mark Newton, our head of technical strategy, views this as a technical rally. I think something that can take us, to recover towards 5,500 or something like that. But I do think that there is, the challenge is going to be, we don't have a fundamental clarity and sort of the all clear enough for us to say that that's going to push us back towards new highs. So I do think we're kind of stuck in the near term, but yeah, I think markets overreacted to the downside. And yesterday, it does look like the messaging has switched. The president has moved towards to letting people know they're negotiating. And I think that's a return, or a quiet return, of the Trump put, because I don't think they want markets to continue to have this heart attack.
So you many times talk about your technical analysts, and a lot of times that doesn't involve trying to gauge what's going to happen with fundamentals or certainly not policies. But in this case, you got blindsided a little bit by something totally unexpected in your view for the size of the tariffs or the level of the tariffs. Why do you feel confident that we're in negotiation phase now, and tomorrow we might be back out of negotiation phase? You could get blindsided again. I mean, then that would throw off your 5,500 target, wouldn't it?
Joe, that's right. One of the things, we spent a lot of time talking to investors between Wednesday, Liberation Day, and over the weekend. And, it's clear to us investors feel that not only were these tariff levels absurd, in the sense that it was very difficult for people to understand the calculation, but it really did break a covenant with capitalism. The idea that businesses need stable and predictable regulations. Many companies moved their supply chains in 2018 because of the need to move away from China, and now they have potentially trillions of dollars of stranded capital again because of these tariffs. So I think that's the seismic shock that's very tough for markets, and the trust that's been broken. It doesn't mean that we can't see a level of clarity that helps restore that trust. And so markets, after this waterfall decline, one scenario is a V-shaped bounce that takes us back to the previous levels. But the reality is it's going to, I don't know what that sort of clarity that's required for that is. So I think it does feel like this will take some time. And one very good friend of mine is Tom DeMark, and he says this reminds him of 2011. I think that's not a bad way to look at it, that it's going to take a little time for markets to regain some trust.
But we did see, Tom, that huge roar back yesterday on the false rumor that suggested that they were going to pause, the administration would pause for 90 days while doing this. So the market may have broken trust, but it's very eager and really hoping, it sounds like, for some relief to come from this.
Yeah, I think so. I think that there maybe were some, that's almost, if that was a trial balloon, it worked. It showed that if there was conciliatory actions that were sort of friendly to businesses, that the market could have a massive, massive move. The idea of like an exporter tax credit, these things really can restore confidence, because at the end of the day, the entity caught in the middle of this has been companies, and the capital that they've invested, they need to earn a return. That hurts shareholders, but it also hurts all the employees that work at these businesses. So I do think that the ripple effects, looking back, it does make sense why the market had a heart attack. But of course, this also means parts of this is very fixable, but it does mean that there's a bit of time involved.
I don't think the administration really planned that trial balloon the way that it kind of worked, but there's no doubt that they were paying attention. I would think it's like, wow, look what can happen in 5 minutes to go from down 800. Let me just ask one other thing, Tom. So we negotiate with the 70 countries and we asked Scott Dustin about it. What if China becomes, it's called a trade war, and the language we're hearing on both sides, it actually sounds like it could be headed for a war. So if we're, if the Trump put involves the idea that we're negotiating with a lot of places and things just get worse with China, would that change your calculus on the Trump put?
Well, 7 countries represent about 70% of that trade deficit. Outside of China, I think the EU and Japan, Korea, Vietnam, Canada, Mexico, I think we're heading, it looks like we're heading towards something that's acceptable to both sides. And really that leaves the U.S. in a better position. I think there's a possibility that we don't ever resolve this with China. So, there's going to be an attempt to maybe build the supply chain or isolate China. I think that's acceptable for markets as long as that's actually what's
so we don't need
Today looked like it was going to be such a great day. The S&P was up over 3.5% at one point today, close to 4%, until this news came out that sent everything snowballing lower. According to a U.S. official, additional China tariffs start at 12:01 a.m. So coming tonight on China. As you will see throughout this video, there was lots of talk today about negotiations on these tariffs. Not necessarily China, but from a lot of other companies. South Korea, Japan, Vietnam, as we already know. And today, it's not sounding, well, after that headline at least, like there's going to be too much negotiations taking place, that these tariffs may actually go into effect. Now, you have individuals like Elon Musk and Bill Ackman and other billionaire investors calling on Trump to come to a deal to end the trade war. Well, first and foremost, Elon Musk calls Peter Navarro, quote, dumber than a sack of bricks. But it is being reported that Musk made direct contact with Trump to reverse his sweeping new tariffs. And I think that is one of the biggest positive things happening today. Probably nothing comes out of it, but Musk and Trump's relationship, a lot of people think is pretty close. And if Elon is telling Trump like, hey, this may be a bad idea, dude, well, Trump may actually listen to that a little bit more so than other people. Now, it's also being reported today that Bill Ackman posted on X. He says, some have misinterpreted my thoughts on tariffs. I'm totally supportive of President Donald Trump using tariffs to eliminate tariffs and unfair trading practices of our trading partners and to induce more investment and manufacturing in our country. I am advocating for a 30, 60, or 90-day pause before the tariffs are implemented tomorrow to enable negotiations to be completed without a major global economic disruption that will harm the most vulnerable companies and its citizens of our nation. Donald Trump also says that China wants to make a deal badly, but they don't know how to get it started. You see how these headlines are coming across? Like there's probably going to be some kind of delay to negotiate what the final tariff rates are going to look like. And we talked about this a little bit in prior videos, but Donald Trump has swung so far to the extreme side with these tariff numbers. He could drop the tariffs down to 25%, which would still be extreme, but that would be seen as good news at this point, right? So you've really lowered the bar for what is essentially good. Now even like a 15% tariff on everyone would be considered fantastic news. Now Donald Trump also wrote on Truth Social, quote, "I just had a call with the acting president of South Korea. We talked about their tremendous and unsustainable surpluses. Tariffs, shipbuilding, large-scale purchase of U.S. LNG, liquefied natural gas, their joint venture in the Alaska pipeline, and payment for the big-time military protection we provide to South Korea. They began these military payments during my first term, billions of dollars, but sleepy Joe Biden, for reasons unknown, terminated the deal. That was a shocker to all. In any event, we have the confines and probability of a great deal for both countries. Their top team is on a plane heading to the U.S., and things are looking good. We are likewise dealing with many other countries, all of whom want to make a deal with the United States. Like South Korea, we are bringing up other subjects that are not covered by trade and tariffs and getting them negotiated also. One-stop shopping is a beautiful and efficient process. China also wants to make a deal badly, but they don't know how to get it started. We are waiting for their call. It will happen. God bless the USA." So after all of the headlines that we have heard that there will be no negotiating these tariffs, blah, 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 literally Trump says countries want to negotiate, that they are negotiating deals. Seems like it was all a big negotiation from the start. And that is why I think markets are bouncing here. But again, it's really going to depend if there is a delay or not. If there's not a delay, then it's going to get pretty nasty. U.S. Trade Representative Greer says too many countries are dependent on exports to the U.S. He also says that port fees on Chinese ships are not all going to be implemented. They're not all going to be stacked, which doesn't make a whole lot of sense, to be honest. Greer also says any future trade agreements will need to have strong rules to avoid third countries like China from taking advantage of them. Italy's Prime Minister Meloni will head to the US to negotiate tariff relief directly with Trump. And Greer says that Trump has been clear that he won't do tariff exemptions in the near term. Mexico's President Sheinbaum says the majority of directors of auto plants in Mexico said that as of now, they have no plans to move their factories. Probably not something you should be publicly saying when the goal of tariffs is to get companies to move their factories to the US. Greer says we are trying to limit imports driven by unfair trade practices while promoting U.S. exports. Greer says the price challenge from Trump's tariffs will affect companies that are largely dependent on imports from China and Asia. Like I said, from day one of these reciprocal tariffs being announced, it is Asia, China, Southeast Asia, that whole region that was really targeted. And Greer says, I see a distinct difference between China and other countries that are seeking to negotiate. And he says the Trump administration is open to ideas from other countries to achieve reciprocal trade. So again, we're going back and forth from Trump's not going to negotiate to he's open to negotiating. And when markets were down almost 20% from all-time highs, it's easy to see how a little bit of hope that this is just a negotiations ploy can be a big positive for markets. But Greer says that higher reciprocal tariffs will go into effect tomorrow. And about 50 countries are speaking to the US about tariffs. But again, China has not indicated that it wants to work towards reciprocity. India's trade minister also said discussions with the U.S. on a bilateral trade deal are going in the right direction. Senator Ron Wyden announces a bipartisan resolution to end Trump's global tariffs. It's also being reported that China made significant changes early in phase 1 of the trade deal, but did not comply in large part. Speaker Johnson also says that the plan is still to bring the budget resolution to the floor tomorrow. Fitch Ratings lowers U.S. retail and consumer product sector outlooks to deteriorating. BlackRock turns cautious on U.S. stocks. It's funny how everyone turns cautious when the markets are down 20%. Like when the worst of it is most likely over, everyone tries to scare everyone. It says researchers at BlackRock, the world's largest asset manager, are increasingly cautious about U.S. stocks. Quote, "We're wary over the next 3 months," wrote Gene Bolvin and his team, citing policy uncertainty that could harm growth in stocks. They reduced U.S. stock weightings to neutral from overweight for this period. However, they remain optimistic long-term, believing U.S. equities driven by trends in AI could reclaim global leadership. And Elon Musk said Navarro is truly a moron. This is because yesterday Navarro called Tesla a car assembler, which is the farthest thing from the truth. White House economic advisor Hassett said this about China, quote, "We are prioritizing trading partners for talks." He says that the Fed will decide interest rates and respects their independence. Hassett says that Trump wants fair and reciprocal trade. We'll weigh that as he decides whether to accept countries' offers in this Fox News interview. So offers are coming in. We will see what deals are made. But you can see as I share more of these headlines how it looks more and more likely that there will be some kind of pause, if you will, to negotiate these things fully before actually having them go into effect. Or perhaps maybe these countries need to feel a little bit of pressure. Maybe that's the tactic. So you want to really be prepared for anything to happen here. And Hassett says we are prioritizing Japan and South Korea on tariff talks. Even UK's Prime Minister Starmer says, quote, "We must go faster in lowering trade barriers with others." So it just sounds like a lot of negotiations are being taken place today, although tariffs go into effect tomorrow. You know, we'll have to see. Technically tonight at midnight, if I'm recalling correctly, the tariffs will go into effect. So literally any time we should be getting some kind of hopefully pause. It probably will come later tonight though, like right at the wire. Now Tom Lee on X is suggesting that the Trump put is now back in place and that of the last 11 waterfall declines we've had since 1929, 7 of 11 of them have been V-shaped recoveries. He's suggesting that we get something like that again, although I don't exactly agree with that. Timelines matter in that regard. You know, it's possible, right? And it's kind of a weird way to look at things because like here in 2009, right? You could call this a V-shaped recovery, but it really took 4 years to hit a new all-time high. So sure, you V-shaped recovered maybe a little bit, but yeah, all-time highs took 4 years to be achieved. And unfortunately, even if all of this, you know, trade situation dies down, maybe there's a 20% tariff on, you know, some of these countries, maybe there's 0% here, large tariffs here. If there's some deals that are worked out, the unfortunate truth is we still need to see what kind of effect that's going to have on the economy. And it has, no matter what, damaged the earnings outlook for this year. And until we get companies that start to actually report on that and give us a little bit of clarity, we're not going to know kind of what to expect. So that's why I don't think a large V-shaped recovery is coming. You could V-shape, though, back maybe to the 550s on the SPY, maybe to this 300-day moving average at about 550 exactly. But anything above that's pretty hard for me to fathom. Now, the unfortunate truth about earnings season that's going to be really kicking off here on Friday with JP Morgan and Wells Fargo and some of your banks, and then really getting going over the next couple of weeks is it's okay if everyone is missing and everyone is lowering guidance. but you just can't be the only one to do that. So if everyone essentially lowers guidance, well, that's bad. But companies won't be as destroyed because of that. Imagine it's like, you know, in the realm of advertisers. We kind of seen this in the last year where everyone did like not great, okay, and then Meta did really good. It's like Meta was rewarded for that, right? Same is true, right? If you're the only company that does well and everyone else is like missing, okay? You're gonna do really well from that. Well, if everyone's doing poorly, you're not gonna do as poorly. It's kind of like an excuse to set a low bar on guidance. And that's some of the risk that we could have over the next couple of weeks as well. You can also see via Seth Golden on X, he says there are now 0 technology stocks trading above their 50-day exponential moving average. As of Monday, this has happened only 5 other times since 2009 and marked the bottom for the NASDAQ each time. Every time you've gotten this, you've hit a bottom and then hit a new high following that. So we'll see if this is another similar case here. Now, in some Tesla news today, Elon Musk says that those who financed the attacks against Tesla will go to prison. Now, the CNN Fear and Greed Index is sitting at 5 today, one of the lowest levels we have ever seen. The percent of stocks trading above their 50-day moving average at 8%, about as low as it will ever get. And the VIX today for a second straight day is above 40. So this indicates there's still a great deal of fear out there. But look at TLT. TLT is red again today. There's not a lot of fear in the bond market, which does again leave some room for further downside in markets. You want to see the bonds really get fearful, I think, before we set those ultimate lows. Now, could you see a bounce in markets? Of course. I think whether or not we die tomorrow or bounce is if we get a delay of tariffs. If we get a delay of tariffs, a 30, 60, 90-day pause or something to let these deals be worked through, then we're going to like that. Then Wall Street's going to, rejoice and stocks are going to move higher. If we don't get a pause, then, we're going to have a pretty rough next couple of days. You can also see the S&P is still at very oversold levels with an RSI of 24. So any good news here and you are vulnerable to move higher. And, that's what people want, is some good news and to send markets higher. I don't know if the bottom is ultimately in. That depends on recession, if these tariffs actually go into effect and stay into effect, what kind of deals are cut with different countries. But I could tell you in the short term, the markets want to bounce. So let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.